Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Our community's mission is to bring more kindness, integrity, skill, and real wealth to the world via crypto. Let's run the numbers. Bitcoin currently up 3.03% to 44,174. Ethereum up 2.2% to 3151. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback at the moment, please know that there's always hope. The sun will come out again, and our community's love and healing thoughts are with you. You're not alone. I'd like to talk to you today about the dangers of candlestick charting in crypto. It's really important to know that there are three forms of crypto technical analysis. TA is just technical analysis. There is stock market TA, forex TA, and crypto TA. Crypto TA is a specially designed, fit for purpose, only focusing on crypto's exponential price action. It understands the crypto market. We buy at spot because we know that the big institutions hunt stops. We also know that we must befriend volatility using the 10-5-10 fund because we can get in excess of plus and minus 35% variability per month in any particular crypto. To actually structure our trades and structure our analysis, we use the CTKS method, which is a very significant upgrade on candlestick pattern analysis. Many people come from a stock market and forex background, and they expect to apply technical analysis into the crypto market, which is fair, very fair when you start off. So many of these people get leverage, they place their stop losses, they don't risk more than 2% of their account, and they follow the candlestick pattern analysis, and they find it very hard to make consistent profit in the crypto market because of the incredible volatility that's inherent. For example, doing hedging strategies, going short and going long. This particular person was liquidated in both directions in a single 15-minute candle. Just horrible, but this is the way crypto works. It's because crypto is open 5.17 times longer than the conventional markets. Conventional markets have set hours and they trade from Monday to Friday. They also have holidays off. Crypto is 24/7. It never sleeps. Also, the volatility inside crypto is something to be reckoned with. When people come from the stock market or forex, they just literally cannot believe the volatility. Crypto is an exponential asset class. Most people from the stock market and forex are used to gradual increases or gradual decreases. For example, a 5% decrease in stocks is regarded as quite a big issue, but a 50% reduction in crypto is just regarded as part of what crypto does. There are also a lot of problems with trend lines fitting your story, and they lose money. We see it all the time in the crypto market. Because there's so much subjectivity in candlestick analysis, many people create a story and they just draw lines to fit that narrative. And because of Rule 79, they end up losing money, but they don't know why they're losing money. Those familiar with candlestick analysis understand that it was created in the 1700s. There are a lot of names of the candlestick patterns and a lot of different patterns. It can take months or even years to learn candlestick analysis. The problem is that crypto is an exponential asset class and there's low effectiveness in actually applying stock market TA and forex TA into the crypto market. That's why I developed CTKS method. It's a 300 plus year major upgrade in candlestick analysis. It literally and virtually replaces candlestick analysis in so many ways. You don't have to rote learn the names of different dojis or gravestones or whatever the particular pattern is. It's really fast to learn. You don't need to remember patterns either. Targets are built into the analysis, as are patterns. It's crypto-specific analysis. It's designed for an exponential asset class, and its multi-dimensional time frame analysis is a game changer. One of the really big problems with candlestick analysis, and something that I've seen analysts fall into this trap time and time again, many times, there are particular patterns that play out, and people try to fit the price actions such as bullish engulfing, bearish engulfing, piercing line, hammer, evening star. All of these particular patterns are done away with the CTKS method. You don't need to remember any of these names, and you'll continuously get the right signal. One very dangerous thing about having a particular pattern, for example the tower top, is that you are expecting a specific thing to occur. What if it doesn't occur? People can get locked in to a preconception, and in crypto that can be really dangerous because price moves exponentially. It moves really, really fast. Also, in candlestick analysis, there are many patterns to learn, and this can get really, really complex. Again, people can fit a story to the price action, and the price will go whatever way it goes. Don't forget, in crypto, the institutions, the smart money, hunt stops. They actually go against the trend, and they always seek to liquidate. The CTKS method doesn't involve itself with any of this. It's already baked into the methodology. So how do you actually learn this method? Always, rule 141 is really important when it comes to learning. Go slow to go fast. The foundation section is a composition of 35 lessons that actually teaches you the foundational aspects of the CTKS methodology. This requires a bit of an open mind because it actually replaces hundreds and hundreds and hundreds of years of analysis that was done through candlestick pattern analysis and candlestick charting. When you go to the testimonials page on www.cryptotechnicalanalysis.org, you will see feedback from many students who have gone through the process. Panos said something really good. Currently, I'm on my second focused run through the CryptoTradingKS Masterclass. I've been in the crypto market since 2013 and had my share of ups and downs. I can honestly state that the CryptoTradingKS Masterclass is by far the best approach to crypto's inherent chaotic nature. It's the single best way to approach this market, gaining experience, aka skin in the game, while becoming anti-fragile in the process. And as Badger said, Ken's technical analysis will eventually become the standard in the crypto space because it's the only TA that makes sense. Plus, it's specifically designed for crypto. And you can have a look through all of these testimonials. You'll get a bit of an indication as to what various students have found as they've gone through the masterclass. Let's start putting everything into practice. Rule 138. All investors become traders every time they buy or sell. Let's take the tale of two investors, two people who said basically, I'm in crypto, I think Bitcoin has potential. One bought here, and let's just take this down to the current price, which is around here. So this particular investor, say they put $10,000 each in, this investor is down $2,741 over a period of 300 days. And this is just because of the inherently volatile nature of crypto. Let's say this other investor got in here, and we'll just match this into current price action. There we go. This investor is actually up 38.77%. This investor is up, same $10,000 investment, they're up $3,877. There is a really big difference between investors and traders. Traders know when to enter. Having this skill is really, really important. You don't want to be this person that buys up high and ends up holding on to a losing position for a long time. Yes, you can look at crypto and say, wow, this is such a fantastic opportunity, but you always want to buy correctly. There's a lot more to it than that, of course. When you look at this particular price action, a crypto technical analyst can tell you exactly what is going on. They can say, I know what the targets are. I have a probabilistic idea of what will be hit and when. These things are really, really important to understand. It's all about probability, and it's not always going to come off, and that is absolutely fine. When people get into the crypto market right at the start, they go through a process called the KS zones. Zone 1 is the panic zone. Zone 2 is the blame zone. These two zones are how to lose money. It's all tied to people wanting certainty out of the market. Typically, people in Zone 1 and Zone 2 buy on green days and sell on red days. It's literally a license to lose money. Zone 3 is the patience and rule zone. This is where money is generated. Zone 4 is where money is kept. People can become very, very rich through crypto, but that doesn't mean they keep the riches. Riches by nature are very showy. On the other hand, in Zone 4, this is the wealth zone. Wealth is very quiet. It doesn't need to show anything, and it can be kept intergenerationally. There's really no purpose to earning a lot of money if you can't keep it. You can also think about it this way. When people get to Zone 3, that's a fantastic place to get to, but that's not all you need to do. If you don't get into Zone 4, you can actually waste or erode whatever you actually create. We don't want that. Part of our community's goal is to become more of a financial blessing to yourself and those you love. We can't do those things unless we get into the real wealth zone, which is Zone 4. And Zone 3 and 4 are focused on probability and making volatility your best friend. They're all about probabilistic fearlessness, knowledge, and forgiveness. People who get to Zone 3 have invested in their knowledge. I mentioned before, in Zone 1 and Zone 2, people require certainty, so they see the price coming up and up and up, and they say, okay, it's certain it's going to keep going, I'm in. And just pretty much at that time, things start to come down. It's a very horrible thing about the crypto market. Crypto is not designed for amateurs, it's designed for professionals. When we see price coming down like this, so many people say, and so many people actually did say, crypto is going to zero around about this stage, 29,200, 29,956, just a little bit under 30,000. What we saw there is so many people liquidating their positions. And what happened? Price just turned around. And you can't really blame this person that would sell around the 30,000 level. Price came down by over 50%, and they just thought it would keep going. And that was 97 days, so that's a really, really long time. What happened? Price actually just rallied up from that point 135%. When price was going up and up and up, maybe this particular person said, okay, it looks all right again. I'm going to start getting in. I feel more certain the price will go up, and they could have bought around this area only to witness Bitcoin come down again. This is a really normal cycle in crypto, and it's one the institutions play with retail investors and traders. There is a way to break this cycle, but it requires people actually learn step by step and not rush through anything. It's like so many things. If you want to play any particular game, you have to know the rules of the game, and you can just treat crypto pretty much like a game. If you know the rules, you will win, but if you don't, you won't. Another thing that happens to investors, they go on the fundamentals. They say, look at these prospects, look at this potential, it's fantastic. But the technicals, the actual price action, will tell you what the reality is. For example, when it comes to Bitcoin, Bitcoin is an incredible asset class. Back in mid-April, Bitcoin came down until basically late July, and it came down nearly 55%, and then it rallied 135% up. Now it's recently come down for 75 days. This actually breaks a lot of retail traders and investors and forces them into liquidating their positions. Rule 781: Crypto technical analysis is a skill, but it's also a philosophy. Crypto technical analysis is all about real wealth and maintaining a positive excellence life trend. One thing with statistics and graphs, and I lectured in first and second year statistics for many years, having integrity is really important in the data. Some people can misrepresent charts and create narratives that do not belong in the data. So that's why we must always have integrity when either looking, assessing, or actually reporting on price data. There's a lot more to it than that, because maintaining a positive excellence life trend, one focused on these components of real wealth, such as kindness, inner and outer peace, strength and boundaries, courage, honor, fearlessness, fulfillment and meaning, generosity, persistence and commitment, as well as money, makes for a very holistic and balanced life. So what are the skills required to profit in crypto? First of all, people must have the foundations, and there's a lot of unlearning of what you have learned to get those foundations. A lot of people get sucked into retail narratives. You want the smart money, institutional mindset. That's zone 3 and zone 4 thinking. The next thing to understand is the trend. Crypto technical analysis is much more than just the chart that you view. That chart, Bitcoin's gravity, which impacts all alts, is really important to understand on a macroeconomic level. All the markets are connected, so if you're just looking at one chart and you don't have a deeper appreciation as to what is happening around the world, you may find yourself on the wrong side of the trade. The next thing to do is to always stack probabilities. We look through a lot of information because we need to know what is going on. We're very diligent people. Timing is also critically important. Detecting weakness and strength in various cryptos is the first level of risk management. When it comes to real wealth, these are the rules of wealth versus the rules of riches. It's very important to understand that riches come and go, but wealth can be added to. There's really no point in doing a very successful trade or investment and then losing your money because the rules of wealth have been violated. To be more of a financial blessing to yourself and those you love includes understanding the rules of money, especially the rules of wealth. And in the trigger section, we talk about when to buy and sell. You need all of these 4 things before you get to a discussion on when you can buy and when you can sell. That's why you can see Rule 184, profit requires patience. Unfortunately, in this fast-paced world, many people are just not interested in putting in the work. It's like they go to university, they want to study law, they go to the first lecture and say, "Where's my degree? I want my degree. I turned up, that should be sufficient." Or, for example, a medical student saying, "Okay, where is my qualification? I've been here for a couple of lessons, that should be it, shouldn't it? I turned up, I need that a meritorious award." Nothing in life works that way. Unfortunately, we've got into a society that is actually undercutting its own foundations. It takes time and patience to go through the CryptoTradingKS Masterclass and learn all these new advances in crypto technical analysis. One thing that you'll find as you go through the actual masterclass, the foundation section is pretty extensive. When people say, "How do I make up a chart? How do I draw lines on a chart?" You literally need all of this to understand how to do that. This is a profession, like a doctor, a lawyer, an engineer, a computer scientist, crypto technical analysis will become one of the highest paid professions in the world. It needs work, dedication, and commitment. From there, people have to go in to the trend section. The trend section is all about what is happening in the world, what things can adjust, what is happening in terms of crypto adoption, and stacking probabilities. Then it comes into timing. The timing of the market is really, really important. Understanding how to read on-chain, off-chain data, and the intricacies inside the market, really, really important, vital stuff. And of course, real wealth is a foundational aspect of crypto technical analysis. You'll find when you go through the real wealth section, it's better than any Tony Robbins training. And the very last part is the trigger section, and that's all about when to buy, when to sell, when to understand what is happening. I use live trades here. I'm very transparent. I show everything that I do. And there's also a live masterclass segment where I just add in what the different things I'm doing are, and I share it with the community. But above all, please do not pay this price of $49.50. Please go to the ambassadors, the CTKS ambassadors. The CTKS ambassador designation is the highest honor in crypto technical analysis. The ambassadors have shown their dedication and commitment to crypto technical analysis in all its facets, especially the real wealth aspects of integrity, decency, and kindness. And yes, they really, really matter. You can find the ambassadors, the official ones here. You can just click on their Twitter handles and you can go across and ask them for the very special code that will get you 80% off. Please do not pay full price. Go through the ambassadors. In the foundation section, you will see there's a lot of chart drawing, a lot of line drawing. This is really, really important. Without this, you will not ever be profitable consistently in the crypto market. It can get a little bit onerous, so that is why Rule 141 is so important. Go slow to go fast. But I want to introduce you to a new concept that will help you. If you've gone through the masterclass before, it will be really helpful. And if you're just going through now, it will be very helpful. And if you're not going through at all, it will be really eye-opening. When we look at Bitcoin, we understand the price is always moving in a wave. It's going up and down, up and down. This is the way of the market. That's Rule 4. Price moves in waves. This is an incredibly important rule to understand. In episode 423, we introduce you to Percy, the magnetized price sheep. Now this sounds pretty bizarre, but it's actually a way of explaining support and resistance, and doing so in a really, really fun way. Buildy, a CTKS ambassador, was providing a little bit of support to a fellow masterclass member in lesson 6 of Foundation. And Buildy said, imagine a fence around some sheep. Maybe it's a long channel. You want to keep the sheep inside while moving them from one location to another. When you think of this, that's like the channel that the sheep are moving in. As soon as they break outside that channel, they're going to a different channel. And they broke outside this channel, going to a different channel. And then they broke outside here, and they broke outside there. You can see the idea of, it's a really, really good example. Sheep, price sheep, hey, why not? Buildy goes on to say, you put the fence on the outer two boundaries of the path. If the livestock end up outside the fence, you know the fence has been broken. This is what we're looking at as crypto technical analysts, broken fences. If instead put a line of fencing meandering down the middle of the path, you don't know if the fence is broken because the sheep could just walk down either side of the fence anyway, so it's not doing anything useful. What Buildy's actually referring to there, if you have a line that's going through that middle of that particular thing, you don't know if the sheep have escaped. the pen, so to speak. You don't know if they're meandering to a different pasture. You want to see it when they break out of there. You're looking for fences that are broken. I really loved this idea, and I created the idea of Percy, the magnetic price sheep, or the MPS. And Percy is all about explaining support and resistance. Tales from the Man Cave created this beautiful graphic, incredible talent, and another ambassador. Percy was born on the 6th of February 2022, and what you can see here is there's a lot of Percys in there. And when you get enough momentum behind price, it can forge through different fences. And what's this? This is like a sheepdog down here. That's the institution. The institutional dog basically herds the price where it wants it to go. And this is something that happens a lot inside crypto, and it completely bamboozles a lot of retail investors and traders, but not so when you've been in the markets decades. You see the footprints playing out all the time. Thank you, Philip, for that really cool idea about the dog. I'm going to make this really practical in a minute, but it's really important to understand the concepts. Sometimes we have weak fences. The Percy price can just break through. He can just literally push them over with his nose. It doesn't serve any purpose. It doesn't hold him in. We have normal price barriers in the sense of fences, and sometimes we have really strong fences, and Percy needs to strap himself to a rocket to just overcome that strength, either to blast through it or go above it. And again, thank you very much, Tales from the Man Cave. What a talent. So what are these support and resistance lines all about? They're literally the fences. Let's grab Percy. Let's see what Percy's up to. What has Percy been doing? Percy got a rocket strapped to him. Let's get the other Percy. Let's get the rocket-based Percy. Percy was on the rocket, and the rocket was plummeting down, and it went as far as it could go. Then it rocketed up. This is the absolute important thing to understand about price. When price rockets down, it will rocket back up. What happens when price rockets up? It will rocket back down. These are very important lessons to learn. But where does it go to? It goes to areas of either horizontal or diagonal resistance. For example, it hit a particular support line and then bounced up to a resistance line. You can think about Percy, the magnetized price sheep, coming down and discovering there was a fairly strong fence here. Percy couldn't get through it. So what did he do? He was magnetized to the other fence. And then what happened? He was repelled by it. There wasn't enough strength to go higher, so he went down. But where did he go down to? And this is the critical thing. When you draw these support and resistance lines, you will actually see reality play out in real time. Percy was trying to get above this level, 38,935, for quite a long period of time. Percy came up, banged it, no good. Banged it again, no good. Had to gather strength, nearly over, but no good. And then tried again. But this time, Percy said, this level of resistance is so strong for me, I need to hop on board my rocket and blast through it. And that is exactly what he did. He hopped on the rocket, destroyed the fence in front of him. When we see these big candles, they're like institutional candles. They tell us the rocket has been attached, and they're really important to understand. Now, what happened? The rocket came up and hit two fences. What happens when Percy hits a fence? He backs away. Percy doesn't like fences. He's gravitating towards them, but he doesn't like them very much. And then he started to get above, no good. He's forced down. And then what happens? This particular resistance level at 41,933, he gradually got through it because he got on his rocket and blasted through it. And this particular barbed wire, very heavy fence, just here at the price of 43,352, that was such a strong fence with so many resistances above it. He needed to rocket up again to get above it. And what do we see now? He's actually above that. Percy has broken out of the paddock and he's on the other side of it. This is really good stuff. When I was lecturing first and second year statistics, I lectured the entire content, all the lessons from the numbers 1, 2, 3, 4, 5. We don't need to make things complicated. And I think we should have fun while we're learning. Why not? It's a way of better actually understanding. Real teaching is about understanding transfer, not information transfer. I like to say that Percy wanted to meet his friend in the other paddock, but he's constantly pulled between this friend, who's very positive, and this friend, who's very negative. Does Percy go up to meet his positive friend or go down to meet his negative friend? What does he do? In the bull market, which is what we're currently in, he wants to go higher. He wants to hang out with his positive friend. So what this is about is the CTKS methodology put into operation. You see all the lines are fences. When you understand the nature of these lines, you can actually understand where price is going. For example, back here, when we drew these lines up, who would imagine the price would stick to them like glue? And you can look through the past episodes. These lines have not changed. They're drawn, they stay. There is integrity in this charting. And that's what we do. Integrity is so vitally important. In the crypto space, sometimes there's a lack of integrity, and that's really, really bad. We're trying to put an end to that. We can also see this resistance level. It's like a fence. Percy can't quite get above that fence. But look, he's on the other side of it now. And look at how price is maintaining. If we zoom in there, you can see how price has been maintained by these levels. If you're an investor or a trader, you must know how to do your lines properly. It's really, really important. And you can see from the foundation section, there are a lot of lessons required to be able to draw those fences incorrectly. But guess what? What is the advantage of when you get that knowledge? To get the correct lines is vitally important, or else you can end up like this particular investor or trader. It can occur on both dimensions. And then people get so lost, so absolutely upset with themselves in zone 1 and zone 2, that they frequently dump what they have just before things turn around. The CTKS method is pure crypto technical analysis. It is designed by a statistician to make sure that actual exponential price movements are captured. There are not linear price movements in crypto. It's all exponential. One thing to bear in mind, when Percy enters a new pasture, he will be magnetized to the next fence. Where is the next fence? It's up here at 47,799. Please always bear this in mind. When you can actually analyze where the fences are, that's fantastic. Now, what happens to Percy's positive and negative friend? When we get confirmed action above here, his negative friend will start to move up, and his positive friend will move even higher. This is a really good thing to know. This is a way that you can incorporate your target analysis in. I always said first and second year stats can be fun, and I found my thousands of students throughout the years just love statistics because it was fun, and things should be fun to learn. But one thing to always remember, there is no certainty inside the crypto market. A lot of people say it's certain to do this or that. We only have probabilities, and we must always assess and analyze those probabilities as we go. We don't seek to have certainty in the crypto market, only probability, patience, and rules. It's really critical. I share my rules that I've accumulated over 30 years with you because I want you to be more of a financial blessing to yourself and those you love. The institutional mindset, which is what you learn in the CryptoTradingKS Masterclass, is to make in advance probabilistic choices. Do not get locked into one thing. Don't just automatically assume the price is either going up or down. Make sure you know what you will do, what decision you will take if price goes down. What will you do? Will you just hold? Will you add? Will you sell? What are you going to do if it goes up? Will you buy? Will you hold? Or will you sell? And the same thing if it goes sideways. All professional traders and investors do this. So now you know where Percy the magnetized price sheep came from. I created it from Buildy's comment. I thought it was such a visual and just fantastic thing to talk about. And thank you so much to Tales from the Man Cave for putting Percy together for us, bringing that concept to life. And one thing that can be really, really good, when Percy has broken down a fence, especially a strong fence, it will flip back up when Percy has crossed it. He doesn't destroy it, he just makes it go down so he can pass, or he gets his rocket and he goes over it, because he doesn't want to walk through razor barbed wire. But the concept is, it will become a landing pad. We can go and revisit it, but it will generally turn from resistance into support. These are really good things to be aware of. And with something like this, a really, really simple example, it can be an absolute game changer in your understanding of the market. It can literally bring the market to life. The main thing to note with crypto technical analysis, we deal with exponential price action, such as what we've just seen here with XRP. Price can go up by orders of magnitude. People from the stock market and Forex are consistently blown away by the incredible volatility inside crypto. But what we do as crypto technical analysts, we actually take that volatility and make it our friend. Let's have a look at Binance Coin. Percy, the price sheep, is at the fence and he's not sure if he can get through or not. What about Solana? Percy the price sheep is on the other side of the fence. He's going to the next paddock. He's going up here and up here. With the understanding of what's happening inside price action, everything is different. It has a whole new meaning. And we can see Bitcoin has just been forging up. This is the thing with crypto. It's an exponential asset class. It does not increase by constant absolute movements. It doesn't go up, say, $1,000 a day. It will go up by orders of magnitude. This is nearly an $8,500 increase in Bitcoin's price. When we get constant absolute increases, we would get a 45-degree line. That's what constant absolute means. When we're going logarithmic, when we're going exponential, it goes up the wall. The KS family knows Rule 45 incredibly well. No alt can escape Bitcoin's gravity. Bitcoin literally has a gravity. That's why we must look far and wide and stack probabilities as to what Bitcoin will do. What I do in the community channel every day, I put Bitcoin's gravity, this blue line, underneath all the alts, so you can see how Bitcoin's gravity is impacting the alts. You can see Binance Coin, the gravity just hugging Binance. You can see a little bit of a difference here in Solana. You can see XRP just lagging a little bit, but making up for it recently. Cardano, ADA, following Bitcoin's gravity, as well as DOT. I think we might get some very interesting momentum here in DOT. Let's have a look at Luna, the same thing. It's not going up by as much. This is really important to understand. 99% of the crypto market will move directionally with Bitcoin. Directionally. Not the same percentage, different percentages, but the same basic movement. For example, when Bitcoin comes down, the alts will come down. You can see it. You can see it time and time and time again. About 1% of cryptos will differ, but this is where the concept of gravity comes in. Gravity will pull them back to Bitcoin. If you would like to learn more about the CryptoTradingKS Masterclass, I've left a link in the description of this video. Also, you can visit www.cryptotechnicalanalysis.org. And don't forget that the ambassadors can give you 80% off that price. And this is a premium Rolls-Royce level masterclass on crypto technical analysis. It's designed to transfer skills and understanding. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers, and to our ambassadors as well. In the comments section today, if you would like to talk about the concept of Percy, are there some other things that we could throw into the mix? I think Percy is just beginning, and I think it's a fantastic way to help people to understand price action, especially support and resistance. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.